Hello YouTube, and Happy New Year. I'm still pretty hungover. Not that I went out or anything, it's just that I was watching some of the coverage of the fiscal cliff on MSNBC and ended up downing a bottle of Jack Daniels. Today's topic, income taxes and the fiscal cliff. Now, my last video was about how irrelevant the top historical marginal rates are. And it got about 3,000 hits, which is nice. You know, it's only about 10 million less than the video of a guy chopping watermelons with a samurai sword. But hey, you know, if I can reach just one person, ideally someone with a vacant TV studio. In this video, I'm going to talk about how irrelevant the current top marginal rates are and why this whole fiscal cliff thing is a waste of my time. Because what happens is people will go on TV and say we need to raise taxes on the rich, and the American public eats that up because, well, the American public loves to eat. But most of these people promoting that are all hucksters. Now, Warren Buffett's really the worst at this because he seems like a doddering old man from Nebraska, but he's conning you like you're a bunch of farmhands playing three-card Monte on your first trip to Atlantic City.
We're going to have to get more money from somebody. Now, the question is, do we get more money from the person that's going to serve me lunch today, or do we get it from me? I think we should get it from me. And I have a lower tax rate, counting payroll taxes, than anybody in my office, and I don't have a tax shelter.
Yeah, except everything he does is a tax shelter. For instance, Berkshire Hathaway has never paid a dividend, but they do share buybacks. And share buybacks are basically like a sneaky tax dodgy way of paying out a dividend, but instead of sending you a check, it raises the nominal price of the stock, so you get the equivalent of a dividend through capital gains. And that's a tax advantage because capital gains is usually a lower rate, but you can also offset it with losses and the purchase price of stock. Incidentally, Buffett just bought $1.2 billion worth of shares back, and that happened only a few trading days before the capital gains rate went up to 20%. Of course, this went unnoticed in the media. They didn't seem to take any interest. You know, they don't care much about Berkshire Hathaway's taxes as much as Anne Hathaway's cooter. Now, to go even further, Berkshire Hathaway owns a portfolio of mostly dividends-paying stocks. So, you know, all their top holdings, Procter & Gamble, American Express, Wells Fargo, IBM, Coca-Cola, they all paid dividends. But if you own those companies through Berkshire Hathaway, like Warren Buffett, you don't have to pay a tax on that dividend because you have a dividend received deduction for your business. So it's basically all tax-free, but you can still realize it through capital gains on your ownership of Berkshire Hathaway. So basically, Berkshire Hathaway is just one giant tax shelter. So I don't know what he's talking about. Now, as you all know, I'm a very successful showbiz professional. One of the things that drives me nuts living here in Hollywood, aside from drug addicts sleeping on the hood of my car, is all these high-profile people in the film and television business saying they support higher taxes. See, everyone out here has a tax arrangement called a loan-out corporation. It might be a little dry and boring to explain on a website permeated with cat videos, but it's basically showbiz tax evasion. So what happens is, instead of having a producer pay you directly for working on a TV project or film, you have them pay this corporate entity that you've created, you know, which is basically just a paper abstraction courtesy of your perfectly tanned accountant. And from there, you can do all kinds of things. You can have that company's fiscal year straddle the calendar year, so you can do income averaging. You can contribute money to a tax-free pension plan, so you can put that defer income. You can deduct basically every purchase you make. There's a lot of things to it. There's some legal liability advantages to having a loan-out corporation, but it's mostly about tax evasion. Here's a little trivia for you. Matt Damon only made the Bourne Identity so he could deduct his gym membership. So at the end of the day, you can raise rates on the rich, but it doesn't matter because the truly rich don't pay those rates anyway. Yes, they don't like it when taxes go up because they still have to spend some money to avoid taxes, but the whole debate is pretty meaningless, and it's about time you stupid peasants understood how this game is played. So let's get serious, you know, so our politicians can get back to doing what they do best, blow drying their hair and having sex with interns. Okay, see you later.